Welcome to Trading Nation. I'm Sara Eisen. Let's get a check on the market's so-called fear gauge, or the VIX, rising on Tuesday to its highest level in about a week. The index's average level so far this year is higher than the average levels for 2017 and 2016. So what do we make of the elevated volatility? Is it here to stay? Matt Maley is with Miller Tabak. Dennis Davitt is with Harvest Volatility Management. Dennis, what do you see in terms of VIX and options?
Well, you know, I always, when people think that this market is really volatile and we're moving into a new volatility regime, I usually can tell that they've not been in the business very long. The average VIX, so if you go back to 1995, we're looking at a 21 level in the VIX. So the anomaly that we saw in 2016 and 2017 was the really low VIX. So the tail risk event, or the black swan event, was a slow motion car crash of 2017, where we saw the VIX trading at 9. So moving out of that extremely left tail low vol event into what is a more normal market is going to feel like the market suddenly becomes significantly more volatile. You combine that with the fact that the indexes are trading at higher levels, so you get 200 and 400 point moves in the Dow Jones, but that's statistically right in line where they should be with the VIX at a normal level, with the index is this much higher. One last thing is February 5th did change the game. February 5th, when we saw the VIX spike up to 50 and we had all the problems with the exchange traded notes that were linked to the VIX, they took out about 70% of the short volatility in the market. And I think the combination of that going away and returning to a more normal volatile market has brought us to the level now that people think it's volatile, but it's really just business as usual.
Yeah, so we should call it maybe getting back to normal instead of elevated volatility. Matt, can you chart the VIX? How does it look to you?
It's very hard to chart the VIX because it has these big, sharp moves when it does spike. And, you know, whether it be 50 like we got earlier this year, like Dennis mentioned, or even when we get spikes to 20. And those things last a very, very short time frame. When you get those spikes, they come right back down. And they just seem like this time they're going to settle at a little bit higher level, which is, again, as Dennis points out, is more normal. The one thing, though, we are seeing a pickup in volatility in the Treasury market, in the bond market, and also in the currency markets with some of the moves we've seen. The currency markets have been the last couple of weeks, and of course today in the bond market. And when you get those kind of pickup in volatility there, it usually spills over into the stock market eventually. And especially when you get, when volatility picks up, it tends to expose some things. And we saw that with everybody was short short volatility back in February. Now we're starting to see a little bit in the emerging markets in certain areas. So I do agree with Dennis that it will seem a lot more elevated, but it will be more than last year, and it actually makes for a good trading market. And we'd always love to have that straight move higher, but that's just not normal.
So Dennis, what's the takeaway here in terms of how investors should position themselves around some of these products? We saw that big problem in February with the VIX ETNs or ETFs.
Yeah, well, I think it was Matt and I on this show last December said that the leverage that's in the ETN market can be problematic. I do think that this is an opportunity to step back into some strategies that are shorter volatility with volatility up here. You're actually getting paid to sell calls against your long stock position. But I always warn people to stay away from leverage. Do not have open-ended risk. Do not sell puts on a stock that you can't afford to buy. And don't sell calls on a stock that you're not already long.
All right. Thank you for the warning and the analysis, as always, Matt and Dennis. And thank you all for watching Trading Nation. I'm Sara Eisen. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.